EMLC. This is JP Morgan's Emerging Market Bond Local Currency. This is an ETF that tracks a basket of bonds in emerging markets according to a JP Morgan index. Now this ETF combines emerging markets, it combines bonds, it combines high yield and foreign exchange, and with all of these cross winds and cross assets blowing, you might think that it would fog any potential wave count. Rather, it crystallizes it.
So here's a chart of EMLC on a daily basis. And one of the things that stand out quite simply is significant volatility. Now, when you look at from the P, you can see one leg to the downside, a small bounce, and then a 5-wave decline. So to us, we labeled that as a 3-wave decline, as you can see on the following chart. Here, here, and here. Now, even if you were tempted to go 1, 2, and this is a big third wave, we've clearly overtaken this high here, which would be overlap and rule out the potential that this was 5-wave down. So this is 3 waves to the downside, probably wave A of a flat or W of a more complex correction, but the wave count was clear. This was a 3-wave decline. Now from this 3 waves lower, what you can see is a budding upside move shown by these 3 purple arrows. Now you can make this 1, 2, 1, 2, 1, 2, or you can make this a diagonal first. There's various ways to count it. We prefer a more conservative way of finding a balance between an aggressive upside move and something more corrective. As always, when you see a wave count like this, wave counts sometimes are like a fine bottle of wine. You have to give them room to breathe. So we chose to make this A, B, and then from here allow for the 1, 2, 1, 2 to unfold. So 3 waves lower, A, B, and a large C wave forming of 1, 2, 1, 2. Now when you go forward and you see the wave count, you can see this 1, 2, 1, 2 led to 3, 4, 5, which finishes 3. So it's 1, 2, 3, and then you can even see here A, B, C, D, E for triangle 4. So 1, 2, 3, 4 of wave C. So we are still working A, B, and big C. And now if we're correct, this should be a 5th wave to complete the move. And it's not just the Elliott pattern that gives you a good risk reward. You can use other technical tools here. So with the wave count, you can see a momentum on the bottom. Momentum peaked right in the 3rd wave. Ideally, you'd like to peak just a little bit to the left in 3 of 3, but it was pretty close. It is diverging now as price goes higher. Momentum is not making a new high. That is a typical 5th wave signature. And of course, the trend channel, the move is channeling properly. So a break below this channel would be the first sign that A, B, C is indeed complete. So be it Elliott, be it in combination with other technical tools, the pattern has been and remains relatively crisp.
So in this decade of heightened volatility, it can be challenging to try to understand the tone and the trajectory of the market given all the crosswinds blowing through the asset classes. But with an ETF like EMLC, not only can you combine the asset classes to get a view of the market, but it also clearly reveals not only the strength, but the forecasting power of the wave principle itself.